Welcome in, everybody. We have an incredible show prepared for you today. We have a very special guest. Ben is joining us today. Ben is an absolute legend. Ben is someone that I have a lot of respect for. He's very genuine, he's incredibly authentic, and we're very lucky to have him on the show today. Ben is one of the fastest rising stars on YouTube for crypto. It's a pleasure to have you, Ben. Ben, welcome to the show.
Yeah, Steve, it's an honor to be here. Thanks for having me on. And as I said a few days ago on my channel, you were the inspiration ultimately that helped me start my own channel, and only 18 months ago, and here we are. So it's great to be on your show.
It's a pleasure to have you. I want everybody listening right now to go subscribe to Ben's channel. Ben, we'll put a link in the description if we don't have your channel to pull up now, but Ben is someone that we recommended here before. We will absolutely have his link in the description. I'm going to put it in the pinned comment as well. And maybe towards the end of the show, Ben can show his YouTube channel and we'll have you go to follow there. But show some love. If you guys love what we do with showing just the facts on the charts and having an unbiased opinion and trying to keep everybody level-headed and trying to provide everybody value, that's exactly what Ben does as well. So go show some love to Ben.
I appreciate that, Steve, and I'm excited to be here, and as we navigate this cycle to periodically provide different points of view.
Perfect. So Ben is going to take us on a nice journey today. He's got some fantastic charts. Ben, the floor is yours. Take it away.
All right. So a lot of what we talk about on my channel, one of the main ideas is logarithmic regression. And the reason we talk about logarithmic regression for Bitcoin prices, the idea behind logarithmic regression curves are that the more rapid growth of an asset occurs earlier on. And then as you move through each cycle, the growth will slowly decelerate. Now, that's not to say you can't, observe remarkable ROIs from market cycle bottom to market cycle peak, but it provides you, one more bit of information to help identify, okay, when are things getting really overheated? And then when are things, much more attractive from a risk-adjusted return point of view? So this first chart, we have two logarithmic regression trend lines, and they take the form of this equation that I have at the bottom. So it's y equals 10, and we're raising it to the power a times the ln of x minus b. X is days, and a and b are fitted coefficients. And the fitted coefficients are actually fitted to what I considered non-bubble data. And the thing is if you try to fit a curve to the entire price, you're going to get something that more or less goes to the middle of it, which of course we can do. But the purpose was to help us identify accumulation phases for Bitcoin. And what I found is that if you fit a regression line through the end of each bear market, it then helps project out the accumulation phase for that market cycle. So for instance, we fit this green line through quote-unquote non-bubble data through around the end of 2018, early 2019 is when we stopped fitting it. Because the purpose, the idea at some point is you have to stop fitting it, otherwise it just becomes a curve fit rather than something that's going to continue to help identify accumulation phase. So this regression line needs to be refit after each market cycle to help identify the accumulation phase for that cycle. And it did help us identify it. We were in it here around the fair value. We came up above it in 2019. I'm sure most people remember this. And then we came back down into it and we re-entered this, a great accumulation phase for Bitcoin. And the idea here is that when we're in the green band, it's a very attractive investment just from a risk-adjusted return point of view. If you look at things like the Sharpe ratio, the Sortino ratio, those sorts of things. When you get above the regression band, you start to get into this maybe more no man's land territory where it's not as crystal clear exactly what Bitcoin's going to do. In these regions, I like to say these are just more bunny hills on the way to something much greater. Once you get into this region, you have to be a lot more cautious because we've seen what happens. We've seen what happens in the past. And the top regression line there's a lot more uncertainty in this line. It is fit to only 3 data points. Each peak, it's fit to those 3 points. The green line, again, is fit to like thousands of points. But the top line is fit to only 3, so there's going to be some uncertainty there. Right now, the upper peak regression line ranges from around 56,000 up into the mid 80,000s. And that would basically be a logarithmic regression fit to the prior peaks and extrapolating out. So if we were to move up into this territory, then it might give us some indication that the market cycle top is coming in. Of course, we can't be fully sure. There's obviously some wiggle room in something that's only fit to 3 data points, but it at least helps us identify, okay, we're getting to the point where we are extremely overheated, and we've been at this point in prior market cycles. So this is the general idea behind these logarithmic regression fits.
This is beautiful. My question would be about the upper band.
Right.
Because there's some data points where, for example, the first data point, we just hit it, right? We held it as resistance.
Right.
And then the second and third data points, we just barely got in, but we never reached the upper part of the band. Right. What's your take on how this cycle will play out? Could we potentially hold it as resistance as we did in the first data point? Or do you think it'll be more like the second and third data points?
I think that's a good question. I think part of it depends on how long it takes us to get there. The rate at which we move up into the band, I think, will ultimately dictate how far high we can push into it. If this market cycle extends a lot longer than we might expect, and I know a lot of people think that 2021 is the year for a market cycle top, then I ultimately think that the price of Bitcoin, it might not go up as high as we would want it to. And one idea that is not considered by a lot of people, though I know you've considered it, is maybe we don't make it to 6 figures this market cycle. That's always an option, and that's something that we have to consider every step of the way. However, if the cycle continues longer, one of the nice things about these functions, if they can be taken as something that we can use to theoretically predict market cycle tops with obviously some degree of uncertainty, we can see that they monotonically increase. So the longer we kind of just chop sideways or gather ourselves, accumulate more, right, then ultimately we could go much higher and still be within the regression band. So let me show you what I mean by this. So if you take the price, so if we take this white line, which is the price of Bitcoin denominated in daily data points, and we divide it by the fair value line, which is basically the middle of this green band, you get something that looks like this. This is actually the percent difference. And the interesting thing about this line is it actually has a pretty cool macro trend line here. And the reason we discuss this is because, well, we can see that each cycle is not extending as far from the regression line. So when you look at this chart, it might be hard to just visually observe it, but each peak is closer to the green line than the prior peak was. And this gives us some indication, too, of diminishing returns. And so if we look at this entire market cycle, these 3 prior market cycles, we see that we peaked, but we peaked closer to the fair value. One idea is, to use this type of analysis is when we're, maybe 30% plus or minus 30% around the fair value, whether that means it's above or below. Historically speaking, it's a great accumulation time. A great accumulation time. You just simply do not concern yourself with moves to the downside or to the upside during this time. It's just business as usual. When you start coming above it, I think it's just reason to be cautious in the market, because it's the easy thing to do is to say that Bitcoin will just continue to go up forever and that this time is different and that type of thing. But we can also see that, well, in fact, so far this time is not different, and we haven't even gotten to our theoretical peak based on this prediction. And that's one thing to consider. So if we go up to this, this theoretical peak, right, which there would be some wiggle room in as well, it ultimately depends on how quickly we get to it. So if we get to it, say in 2021, then we might see an overvaluation of 400 or 40. Let's see, this would be several hundred%, maybe 300 to 400% overvalued from the fair value. But then that begs, that brings into question, well, what is the fair value of Bitcoin? Well, right now, according to the regression line, the fair value is $11,000, approximately $11,000, but it's increasing constantly. It's increasing constantly. And this is something we need to keep in mind. And it does not mean we'll ever see $11,000 again. We've spent years above our fair value, and by the time we come back down into it, the fair value could be $40,000 for all we know. But one thing to consider that I like to provide an alternative perspective on is, well, what if this cycle is longer, right? What if this cycle will ultimately be remembered by a lot of mini peaks? We had our 2019 peak at 14K. Maybe we have a 2021 peak. I don't know if it'll be at 42K. Obviously, the year just started. It could go much higher. Well, then what if we have a 2022 peak or a 2023 peak that ultimately we have these peaks that ultimately take us to the macro peak of the market cycle. So one idea is, well, what if something like this happens? And this is something I just like for people to keep in mind as we navigate this cycle, because from the institutional perspective as well, if institutions are helping to drive demand for Bitcoin, a lot of it takes a while for these big players to get money into the market, and I could see this cycle extending potentially much longer than what we've seen before. And one idea behind that as well is to see that the time between bottoms and peaks is actually increasing so far. Like if you measure the time between here and here, it's about 2.5 years. From here to here is around 4 years. And the same thing goes if you measure from bottom to bottom. It's also increasing. Or if you measure from bottom to top of each cycle, we can see so far it has been increasing. Obviously, the general narrative is it's a 4-year cycle. However, the only 4-year cycle, according to the data, was the last one. And so it's just something to keep in mind. It could be a 4-year cycle, but we want to be a little bit pragmatic about things, be flexible on the idea, well, it could extend a lot longer than the ones we've seen in the past. And so to just wrap up this train of thought, what if it peaks, in late 2022 or even 2023? At that point, on this macro trend line down, it could be a 250% overvaluation from the fair value. But the fair value at the time, in a couple years, will be $40,000. So if we reach a 250% overvaluation from that point, then it would yield a $140,000 Bitcoin. So to go back to your question about, how high up in the band we can go, or what will ultimately dictate the market cycle peak, I think a lot of it is time. The longer we have to build up to it, I think the higher we can ultimately fly.
I like that analysis. That's beautiful, Ben. From what I hear, you're on the side of the fence where, hey, this could be longer, which I think it's good to always be contrary to popular opinion. Is that where you ultimately land, or are you open to the fact that, hey, this could be a lot shorter than we think? Mm-hmm. We have to react a certain way, or are you of the mindset that, hey, it's looking like this could be longer than a lot of people think?
That's a really good question. And my answer to that, so back in 2020, what I said back then was, if we can get to a sustainable $20,000 by the end of 2020 or early 2021, then we at least have to be flexible with the idea that it could be shorter, right? We have to be flexible with it, because in prior cycles, once we reached the all-time high and started moving up, it ultimately we ultimately put in our cycle peak, within that year or so. So I would say we want to be flexible on it and ultimately see what the chart says. At the end of the day, I think that the two main theories that we talk about are lengthening cycles and diminishing returns. Diminishing returns, I think, is clear as day. Okay, I think as measured from market cycle bottom, it seems a lot more likely. The bottom for this cycle is $3,100 back in 2018. So for us to not see diminishing returns as measured from the last cycle, then we would need to get to around $310,000, because from the last cycle we went from around $200, actually less than $200, it was like 170 something, up to almost 20K. So it was a 100x. So for us to not see diminishing returns from market cycle bottom, we would need to go to a $310,000 Bitcoin. And if we were not to experiencing lengthening cycles and diminishing returns, we would need to go to a $310,000 Bitcoin by December of 2021. So we would essentially need to go up another 10x from here over the next 11 months. And while it is theoretically possible, and we're not going to dismiss anything, we also want to maintain some air of pragmatism, because it's these theoretical numbers that get thrown out. Like in 2017, people were saying, all right, it's going to 50K. If you have this single number in your head that it has to reach, that's a good way to get burned, with Bitcoin. So I think the idea, as you said a few days ago, is to see what unfolds on the charts, and see kind of how things play out for the rest of 2021. If we push into the peak regression band later this year, I think there's a much more likely chance that the cycle will be shorter than the data has previously suggested. However, if on the other hand we see something like this, we had a 2019 peak, and we could have said back then we were going to see a shortening cycle, but most people don't consider the 2019 peak at 14K to be our market cycle top by any means. I mean, it was lower than this peak. So the idea is, what if this cycle is more akin to this cycle over here, not the prior one, where we have a peak and maybe we come back down for a while, and then we have another peak later on. And then ultimately we might say, well, why would we discount the 2019 peak? Maybe it's going to be a triple peak cycle. So there's just a lot of different ways we can look at it. And ultimately, we use that data to look at the probabilities of things happening, and we just follow it every step of the way.
I think that's beautiful analysis, and I also think it's great to mention to everybody who's relatively new to the space, like, hey, $310,000 Bitcoin, it's potentially possible, but it may not be probable for the year of 2021. But I like your concept of, hey, this could be a lot longer than we think, and here's why, which we'll have to react to that as well. But just keeping everybody who's new level-headed, because out there in the news world, a lot of big numbers can be thrown around. It gets people very excited, and greed is a very dangerous emotion.
It is, I think it's important for people to realize too that even if it were to go to 300,000 this cycle, the likelihood that a lot of people sell at that point is very low, just because selling at the peak is something that is incredibly hard to do. And so that's just that's another thing to just keep in mind as we talk about these cycles. The general idea is, okay, well, when is it overheated, and when is it not overheated? And if you can become better at identifying that it improves your risk-adjusted returns. Like if you account for volatility and you account for, say, historical returns or projected returns. So it's all about having a sense of, okay, where are we generally in the market cycle? And I think that'll go a long way.
I love that.
So the next chart that I wanted to show, and this would be, this is a chart that is very interesting, I think. So first of all, we have to say that, let's suppose that we're in our fourth cycle. And the way we're measuring this is from our theoretical market cycle bottoms here, and here, in these different years. So this would be cycle 1. This is the ROI as measured from market cycle bottom. Note that it is daily data. It doesn't capture hourly wicks. If it did, the first cycle would even go higher than it currently is, but it only captures daily closes. That's the first cycle. And you can see that it peaked after around 250 days or so. And it peaked at, some ridiculous ROI here, several hundred, like 600x or so. But the second cycle took longer before the peak. And of course, it sort of assumes that this peak here is a separate, or is in the same cycle as this peak. This is an assumption. Okay, this is an assumption. But what we notice is that while the ROI from market cycle bottom is slightly diminished from this cycle, but the peak also took a lot longer to get to before we had these 85% correction. So this was cycle 1 and cycle 2. But then if we put on cycle 3, we see the same pattern. The ROI as measured from market cycle bottom has diminished again. It has gone from 400, 500x down to 100x. And so this idea that Bitcoin is going to reach $300,000 implies that we would need to see a 100x from market cycle bottom, because the market cycle bottom again was $3,100. So we're not going to say it can't happen. We just want to say if the trend continues, then there's a higher probability that we don't quite make it to that level. And that's just what we want to reiterate. Now, the interesting thing so far that has happened this cycle is, well, we're actually ahead of schedule in terms of where we are in the cycle. You can see that cycle 1 peaked here at around 250. This one peaked at around 700 days. Our third cycle peaked closer to 1,050 days. Well, so far, as measured from market cycle bottom, cycle 4 is in fact ahead of cycle 3. But that doesn't mean that it will always stay that way. And that's what we want to, the main idea is that it could keep pace, and we don't want to discount the idea that it can't keep pace, because it could. However, it might also not keep pace. And let me show you what I mean. If you kind of squint your eyes here at the very beginning, cycle 4 at one point was ahead of cycle 1. At the very beginning, it was ahead of cycle 1, but ultimately it did not keep pace. And then a little while later, in 2019, cycle 4 was ahead of cycle 2. But as we can see, it ultimately did not keep pace. Now, a few hundred days later, cycle 4 is ahead of cycle 3. So the idea that it has to keep pace for the next 11 months or something to ultimately print a $100,000 or a $300,000 Bitcoin by December, it's simply not that likely. But again, we won't discount anything. So if in say 6 months we come back and look at this chart, and we're either going to say, okay, well, it's kept pace with it, or it hasn't. And if it hasn't, is it going to be that surprising? I don't think it's going to be that surprising, because if the idea that it just because it's ahead of it means it will keep pace with it. Okay, it was ahead of cycle 2 at one point, and it didn't keep pace with that. It was ahead of cycle 1. It was ahead of cycle 1 at a different point, and it wasn't able to keep pace with that. So we just want to be, we want to be cautious on the idea that it has to continue up this curve. Of course, I'm not going to argue with a $300,000 Bitcoin in 11 months, but I don't expect it to happen.
I think this is a beautiful chart. I really enjoy this one, and it puts it into perspective with these runs. What would you say would be attributing to this current cycle being a little bit disproportionate relative to the other cycles? Meaning, when early on, when we literally crossed over and grew at a faster rate, and then slowly diminished, and now we're doing the same thing, what would be the attributing factor, in your opinion, to this cycle being a little bit out of whack relative to the others?
There's a number of things that we could theoretically point to as fundamental reasons. One reason would be the institutional money coming in, and it's not even just the institutional money, but it's the narrative that institutional money. I mean, it's a true narrative, but the narrative that institutional money is coming in will give people more confidence to throw money into Bitcoin, because they think, okay, well, if institutional money is coming in, then it must be a good idea. However, one thing to consider is that not all institutional money is smart money. If you look historically, there are cases a lot of times where institutional money does not make good short-term decisions, and so that's one thing to consider. Another thing to consider is just that, well, as Bitcoin gains popularity, as its popularity grows exponentially, people are becoming more aware that it's not just this thing that's going to it's going to go to zero, right? People are starting to think, okay, maybe this is just this macro price discovery mode where it goes up hundreds of percent over a relatively short period of time, and then it just has a natural correction back down. But each correction is still higher than where it originally started from that cycle bottom. So I think more people are becoming in tune with the idea that, okay, this is likely here to stay. And then obviously the third thing that could cause it to be slightly ahead of schedule it could be the money supply. If you look at this year, the amount of money that is entered into the market, obviously it hasn't all entered into crypto by any means, but just in general, the money supply. If you look at M2, we were not supposed to have this money supply, this level of money supply until 2023. I think it's gone up 20% this year. So obviously that could be yet another thing. There's more money circulating around. People have more money to throw into cryptocurrency. Also, another important thing is that DXY, the US dollar currency index, has gone down about 13% since March. In 2017, the dollar went down about 15%. And we know what 2017 brought. 2017 was an amazing year for Bitcoin. So Bitcoin tends to do well when DXY is not doing well, the US dollar currency index. If the dollar is losing value, then generally Bitcoin and stocks are gaining value because people want to move into a different asset that isn't going to, at least they think, depreciate. So those are a lot of the different things we can point to. And then one more thing is, last cycle, I think, was a very clean cycle in terms of the market structure. We had a fairly obvious accumulation phase, and then we just systematically went up, every few weeks, and then we would correct back down to the 20-week SMA or the 21-week EMA, but ultimately we held it as support and continued higher. So far, this cycle looks more akin to cycle 2 than cycle 3. So it could just be that, each cycle is going to have, somewhat of a different characteristic than the cycle before it. And I think so far that is the case. Cycle 4 does not look like cycle 3 by any stretch of the imagination. And to some degree, it already looks very different than cycle 2, because if we were catching up with cycle 2, we would have already put in 100x this cycle, which obviously has not happened.
Yeah, I think this is a great way to look at the big picture of these cycles, and for everybody to understand, hey, this cycle that we're in right here has been very, very different for a multitude of reasons. But the reason cycle 1 and 2 were very different is Bitcoin was super new. There weren't a lot of people in it. There weren't a lot of whales in it. There weren't a lot of investors in it. And it just grew so fast, and the bubble popped so quickly that, yeah, I think cycle 3 was just textbook. It's a beautiful cycle. And this one has a lot of curveballs.
Right. And I think part of it is people have looked at the last cycle and they're trying to identify, okay, where are we? And then everyone's coming to the same conclusion that, oh, we're still early on. And so then people front run it. Back in 2015, I don't think it was clearly, as obvious that Bitcoin was going to put in another 100x. It wasn't as obvious because at that point, the cycle was dragging on a lot longer than the prior cycles. Last cycle was a 4-year cycle, but the cycle before that, by the time that Bitcoin was at a modest 2 or 3x from the market cycle bottom, the cycle before that had already put in 100x. So it was like, people were very unsure if this thing is going to continue or not. But then you go forward in time another cycle, and people are starting to say, oh, this is where I want to invest, and more people are looking at the charts and seeing how early on they were. And I think this continues to cause these people front running what otherwise would have theoretically happened. And another thing to consider as well with cycle 1 and cycle 2, as we all know, the smaller the market cap, it's easier to move it. It's why so many altcoins can see much higher short-term gains. They're a lot riskier than Bitcoin, but that's why it's easier to move smaller market cap coins. It just doesn't take as much volume to move them up the scale. So that's why it's another reason why Bitcoin was able to do so well early on. And a lot of people like to compare altcoin performance to Bitcoin performance today, but if you go back and measure altcoin performance today against Bitcoin performance when Bitcoin launched, most don't stand a chance to experience something like Bitcoin experienced when it first launched. So it's all, you have to be fair to Bitcoin and say, okay, well, Bitcoin's much further along. It's going to take a lot more volume to get us to that six-figure mark. And the idea of institutional investors coming in, we needed institutional investors to come in to get to six figures because we need that level of volume to make it there.
Absolutely. I think those are fantastic points, and I think this is great for the audience to see this cycle we're in now relative to the other ones. Now, where are you in terms of altcoin cycles? Now, if, for example, there's a lot of comments that we always get about if Bitcoin continues to rise, what does that mean for altcoins? And if Bitcoin has a correction, or let's call it our next bear market relative to these other cycles, what happens to somebody's favorite altcoin when we go through these different peaks and valleys?
Yeah, so generally speaking, what I've learned by looking at just what the data has suggested in the past is that altcoins do very well when Bitcoin is well above its 20-week moving average or the 21-week EMA, and it's moving sideways. Okay, so volatility on Bitcoin, if volatility on Bitcoin is reduced, but it's still a very bullish Bitcoin, meaning it's very far extended from its 20-week moving average. I think now it's 60 or 70% above it. I don't know. I don't know exactly what it is right now, but if the price of Bitcoin is incredibly bullish, meaning that it's very far extended in the short term, but then volatility reduces, like we've seen since earlier in January, we've seen a slow Bitcoin bleed. This is fine, historically speaking, for altcoins. And this is why you see the altcoin market doing so well. Despite the fact that despite the fact that the price of Bitcoin has been falling, the dominance has actually been going up. And we've seen this time and time again. When Bitcoin is bullish and it's extended far beyond what most people could have imagined it would do in the short term, people will then speculate more on altcoins. However, you pay for that theoretical return, right? You pay for that return with units of risk. And risk can somewhat be measured by volatility. And if Bitcoin were to correct from here and go back down to the 20-week moving average, which, by the way, just crossed $20,000, and if it were to dump below that, then you're going to, most people are not going to be happy on having too much altcoin exposure in the event that happens. So it's all about managing your risk. It's all about managing risk and trying to identify, yes, there is a theoretical higher ROI for altcoins. We know this. I mean, this is evident in the data. Ethereum, Ethereum is up 13x since March, right? It's been doing great. However, at the same time, if Bitcoin were to have a strong correction, Ethereum would bleed a lot harder than Bitcoin. So you pay for that theoretical ROI with risk. So again, there's no luck involved. It's a calculated investment based on risk, and it pays off or it doesn't. And if you're able to realize that higher ROI with other coins, you ultimately paid for that ROI with the risk you took on by holding it.
I think that's also good for the audience to hear that explanation, because a lot of times we lead with emotion in trading and people get attached to that favorite altcoin and they're not quite sure when to add to their position, when to take away their position, or what to do with their next favorite altcoin. So I think that's great information.
Right.
What do you think about in terms of the severity of these bear markets? Where if we look at your chart here, obviously we can say time is a factor where they're getting longer, but also we can say that potentially the severity of these bear markets are less and less as we continue.
Yeah.
What would you say to that?
I think it's generally going to be true. I think that so we've looked at this before on my channel where we look at annualized volatility. It is decreasing. It might not feel like it, especially if you're new to crypto and you're like, how is this volatility any less? I mean, this is insane volatility. Compared to prior cycles, the volatility, at least measured, say, on an annual basis, where you look at the maximum price of Bitcoin and the minimum price of Bitcoin in any given year, and you look at the difference, the percent difference there, it is decreasing. And one of the interesting ideas about the idea of lengthening cycles, if lengthening cycles do end up playing out, is that it would actually put the peak closer to the next halving, right? The next halving coming in, say, 2024. So imagine a cycle peak that doesn't come for a couple more years. The next bear market might be closer to the next halving than we've ever seen before. And one of the nice things about that is that perhaps the next halving, rather than catalyzing a new bull market, maybe it helps curb the effects of the next bear market. That's just one other way to think about it, right? And again, ultimately, we cannot come to this conclusion yet. We have to see what we have to see what happens in 2021. We have to be flexible. I said this last year that while the data suggests that lengthening cycle theory is true, we have to be flexible on the idea that if the data changes or stuff starts changing, we can't just pretend like it has to continue to go up for 2 more years if it's already at 6 figures, or if it's continuing on up higher, a lot higher this year. So we want to maintain some level of flexibility on it, but at the same time recognize that we are experiencing diminishing volatility, and over the next 2 decades, 2 decades from now, annual volatility of Bitcoin will look a lot more normal in terms of, say, the stock market or something. But again, the stock market in 2020 was nothing like most years, so it's all a matter of perspective. But yeah, so that's sort of, to answer your question, that's more or less what I think is based on the data, is that volatility is reducing, both to the upside and the downside, and I think that we'll continue to see that play out over the next 2 decades.
Love it. Do you have any more?
Yeah. So one more chart, and this tries to help show us how things can get overheated quickly, and help us identify theoretical peaks, but also show that every time we get to this level, it's not always the peak of the entire market cycle, depending on how you measure the market cycle. So this chart shows the price of Bitcoin on a logarithmic scale, color-coded by risk. And the risk metric is just based on price, volatility, and time, and it accounts for diminishing returns. If you don't account for diminishing returns, then it would never project this to have turned red so early, because we were still nowhere close to the ROI we had seen from the prior cycle. So the risk is color-coded from 0 to red, or from 0 to 1, or from blue to red, and blue means closer to zero risk. Obviously, there's no such thing as zero risk. There's the market risk of just getting into crypto in the first place, plus the risk of owning Bitcoin, say the idiosyncratic risk. And then it goes up to 1 for where it's red, and that means it's historically overheated. And so far, you can see we've had 4 times before the current time where it reached that level of extension in terms of being overheated. However, not every time that we reached this level was at the cycle peak. For instance, in 2013, we reached a risk level in the 0.9 to 1 risk band, and it was not the cycle peak if you include this as an entire cycle. If you want to break this up into 2 cycles, then of course that you could say that's the cycle peak. But this can help in identifying how overheated we are. This risk metric, obviously, I created it in, I believe it was late 2018, early 2019. I presented it on my channel in 2019, later in 2019. And so you always have to be cautious of curve fitting, right? You have to be cautious of, okay, well, it wasn't around back then, so how do we know it's going to work going forward? Well, there is some uncertainty, right? There's always some uncertainty in all models. All models are wrong. Some are useful. What I can say is that the risk in March went down to 0.12, which is about as low as we see it get. We sometimes see it get to that 0.1 level. It doesn't happen very often, and we went down to just above the 0.1 risk band. So far, it was very instrumental in helping find a theoretical bottom. And then recently at 42K, we went into the 0.9 risk band, actually. And if it's hard, it might be hard to see on this chart, but if you take the color out of it and plot the risk on the secondary y-axis, you can see we came up to the zero point 0.9 risk band just a few weeks ago. And since then, it's corrected sharply back down, just like we did in prior cycles. So again, ultimately, if Bitcoin were to go to 60K or 70K or something tomorrow, then it would really test the risk metric, right? It would really test it. However, the nice thing about it is it's dynamic. So if Bitcoin were to go back to 42K later on this year, then the risk level at 42K will be less. And I mean, that obviously has to make sense, considering that at one point the risk at $1,000 was up at 0.9, but then later when it was back at $1,000, the risk was much lower. So it's dynamic, and it adjusts with the market to try to tell you how overheated you are, or how cooled off things are when you see dumps down to to levels say below 0.3 or so. So really, I mean, below 0.5 for me, I would consider say moderate risk tolerance. So if you're accumulating Bitcoin and you want to take on some level of risk, it could correspond to accumulating it below a certain risk level. But again, each person can identify what their own risk tolerance is. I know some people that only like to accumulate it if it's below 0.3. And then there's some people that accumulate Bitcoin up until it's 0.8 risk, right? So it all depends on what your own risk tolerance is, what your outlook is. Are you a long-term holder? You don't really care about these bubbles. You just want to hold it for 30 years and just have it there waiting for you. Or do you want to try to take advantage of some of the bubbles or not? So that's the purpose of the risk metric. And it tries to help us identify if things are getting very overheated or not. And you can see we've come back down about 2 risk bands since the peak. So just one more tool that we can use. Again, all models are wrong. Some are useful. And we try to show as many models as we can so that people can come to their own conclusions.
I think this model is perfect for long-term holders, which are few and far between in Bitcoin. I feel like a lot of people have so much greed that they almost force swing trading upon themselves without a lot of trading experience. But I think that's the perfect chart for a long-term holder, to see the big picture and say, okay, I'm going to buy when there's not a whole lot of risk, right? Maybe it is below the 0.3.
Right. For
long-term holders, maybe it is. And they only look at it that way, and they only sell when we're above the 0.8. Otherwise, a lot of emotion can take control. And as you alluded to, a lot of people will be adding to the positions at 0.8, even at 0.9.
Right.
Adding to the positions.
It's true. And Bitcoin will probably bail them out eventually, right? It will probably bail them out eventually.
If they were patient.
Right.
Unfortunately, those types of mindsets are not patient enough to see the benefit on the other side, because they're going to have to wait 6 months at least to see something come of that position. But unfortunately, they'll capitulate too soon. So I think that model is beautiful for long-term investors. Can you put the colored spectrum back up again?
Right.
This is perfect for long-term investors.
And one thing to consider that we talk about a lot is, never chase a bubble. Like, establish your position and then wait for the bubble to come to you, because it puts you in a position of strength. The people accumulating at $3,000, at $4,000, at $5,000, they're already up, 5-10x, right? It's easier to stomach 30% drops when you're already up 7 or 8x, right? It puts you in a position of strength. The people coming in at 0.8 risk or 0.9, it doesn't mean that they can't see a nice short-term ROI. It's possible, right? It's always possible. But what it does mean is that it's going to be a lot harder for these people to stomach 30% losses, because their cost basis is just simply so much higher. And ultimately, once you have these people up 10x, and then the people eventually that bought at 10K are up 10x, eventually there's not enough new buyers to offset all these people that are wanting to take profits up 30x or something. So, and that's ultimately then what brings the bubble crashing back down, is everyone wants to cash in. And that's another reason to discuss, to the idea behind diminishing returns, is that each cycle, people don't want to be that guy that watched it go up and come back down. Like they want to start to front run it, and each cycle, in the same sense, the ROI somewhat diminishes as well, not only because of market cap limitations, but also just the idea that there's more investors, more people are wising up to what's going on, that it's, and the market over time is becoming more efficient, right? We can observe that it's the price of Bitcoin is becoming more efficient as we navigate each market cycle.
Yeah, I think that's a great point. But the volatility is what really it takes a hold of everybody's lives. That's in crypto. If they're not used to trading, this is an absolute roller coaster. But I think the way you presented it today, I think it gives everybody a breath of fresh air. Like, hey,
Right.
this is getting less volatile. This is we're lengthening these trends. We're lengthening these cycles. So I like this perspective. I think it's great to keep everybody level-headed and looking at the big picture. So I think the charts that you presented today were fantastic.
Thanks. Yeah, and I try to show as many models as we can to just show the macro perspective of Bitcoin. And one thing to consider for people watching, is there are other asset classes. I like to think of it as, okay, I want to get exposure to Bitcoin, the best time it makes sense to get exposure to Bitcoin. And that doesn't mean FOMOing in at 42K when it's up 4x in 3 months, right? That's not what that means. And it doesn't mean it can't go up. But there has to be some level of risk where you say, you know what, I want it to go up, but do I want to keep throwing money into something in the short term, or do I want it to come back a bit? And we've already seen that, right? I mean, suppose that you were an investor that you bought below 0.7 risk. Okay, and there's some aggressive people that like to buy below 0.7 risk. Just waiting a few weeks, that would have allowed you. We're already back below 0.7. So again, I don't buy up to 0.7 risk, but to each their own, right? Everyone has different goals. It depends on what your goals are, and that's the beauty of it is you can tailor it to meet your own goals. It's like getting a ticket on a train. You can hop on and you can hop off, and it doesn't mean you can't hop back on in the future, right? You got to figure out what makes sense for you.
If the train comes back to where you were.
Right. That's true. It's all about, in my perspective, it's mostly about percent gain, like the percentage rise, right? The how far it's moving from say where you accumulate to ultimately where you decide to take some profits. Beautiful.
I have another question for you. It's a little bit off topic.
Sure.
But what are your thoughts on the current smaller cycle that we're in relative to the bigger market cycle that you discussed today?
Yeah, it's a good question. It's really hard to say, because one of the things I think is that short-term price movements are geometric Brownian motion, right? It's a random walk. I don't think that it's possible for me at all to predict what will happen in the short term. I've tried it in my head before, and a lot of times Bitcoin just does something that you don't necessarily anticipate. When it dumped to $3,800 in March, most people did not anticipate that dump. Most people, I don't think, thought that it was going to rally 4x in 3 months. Of course, now it's like, oh yeah, like this is, hindsight obviously makes things a lot easier. So in terms of the short-term move, what I would be looking for, if this rally continues over the next few months, and we start going up to 50K, 60K, 70K, something like that, then I think we have to consider that maybe this cycle is shorter. It's a possibility, right? We don't want to discount any possibility on anything, because that if you get too focused on one thing, that's a negative, right? It's a negative if you think it has to play out a certain way. So I think we need to just keep an eye on it. My general inclination, and for the health of Bitcoin, and so that I can ultimately see it trend much higher, I would like it to remain cool for a while. But I don't always get what I want, and so we have to see. We'll just have to see how it unfolds, right? If it can establish itself back above 42K and it continues on in price discovery to 50K, 60K, and so on, then things are going to get overheated very quickly. And I think we'll be definitely entering into a new paradigm mentality of Bitcoin, which is a very dangerous time to be coming into the market. If we get to that point where everyone starts thinking the price can only go up, right? And as this recent run happened up to 42K, we saw that a lot. In fact, I was seeing a lot of people saying, the times of 30% drops are over because institutional money is here. We've already seen a 30% drop since 42K. It went down below 30K. So we already saw a 30% drop. So I like to operate on the idea that this time is not different, because generally that it's a more conservative approach, and I'm fairly risk averse. I mean, I like taking on risk, obviously, because I'm in crypto in the first place, but once you take on that risk of being in crypto, I am fairly risk averse, and I'd rather err on the side of caution than FOMO in at a $42,000 Bitcoin. But if we come back down, then if Bitcoin can ultimately trend back down or cools off for a while, then it might enter an accumulation range again for people who want to take on, say, some level of moderate risk, right? So we ultimately have to see what happens, and if it does come back down, then I would see that as an opportunity, not as something that I need to be fearful of. I would say, you know what, I'm going to reestablish a larger position, probably, and continue on. But we'll have to ultimately see how things play out.
Beautiful. Great analysis. Great analysis. I think this will be very helpful for my community, and they can clearly see that you're very genuine, you're very authentic, you're very knowledgeable, and again, only the facts and the charts.
Right.
And that's what I really respect about you, and that's why we gave your channel a little call out maybe 6 months ago or something like that, and we're blessed to have you on the channel. This has been phenomenal. It's an honor to have you on, and I look forward to having you on many times in the future. This was our very first collaboration,
Right.
and I believe it was your first when we were on your channel just a few days ago.
Mm-hmm.
So everybody go show some love to Ben. It's Benjamin. The last name is Cowen, or you can look up Cryptoverse or Into the Cryptoverse.
Yeah.
Either way, your channel will pop up. We'll definitely put Ben's channel in a pinned comment down below, also in the description. And if you're new, you can also follow us as well. But most importantly, show some love to Ben. Ben, correct me if I'm wrong. I think that's all the charts we have, right?
That's all we have for today, but I'm excited to have you on the channel in the future, and I'm excited to come on your channel in the future, and we can continue looking at the charts, watching how things unfold, whether they unfold how we like or how we want or not, but just to follow the chart every step of the way and not let emotions cloud our judgment.
I love that. Love that. Ben, it was a pleasure, and I look forward to having you on. Show some love to Ben, and we'll see you right back here on the next video. Peace and love to the underdogs.